Let's talk about the market here. We'll look at the weekly. We'll look at my trade that I made kind of last night. Well, actually, really early this morning. And we'll take a look at the daily. And we will take a look at the intraday charts and talk about the trades of the day. So let's get started here on the weekly chart. I think I made a change yesterday on Monday to not show the weekly chart. I don't think I'm going to show the weekly chart every single day because sometimes it's just a little bit redundant. But I will show it probably at least 2-3 times throughout the week because I know some people want to see that. That's fine. But you can always go back to the previous day's video to see the weekly chart if I didn't, if I don't show it, because that just means nothing's really changed much. But today's Tuesday. We do have a little bit of a change here in the weekly chart, so I'm showing it. Okay. So here we are with the red candlestick. Got a range of about 98.5. So a pretty decent sized candlestick for the week so far for the first 2 days. We can see that this week, sure enough, we had all-time highs. I think that was Sunday night. Pretty sure that was Sunday night that this all-time high happened. Because again, we're looking at futures and they opened on Sunday night and they run all the way through Friday, 4 o'clock Central Time. So now today is only Tuesday, right? So a lot of time to go still. We got Wednesday, Thursday, Friday, and here we go. It's another here we go again scenario, right? Here we go again. Another here we go again scenario. We had a couple here we go scenarios right here. They ended up basically almost being dojis. So the market stayed strong. And, we had a little blip here, which wasn't much. And the only other time we had any kind of decent red candlestick was this guy right here, okay? So when you see a red candlestick in the week like this, you take notice. Right, we got a red candlestick here. All right, near support there is 51.69 on the weekly chart. That's actually supposed to be a check. That's not a very good looking check, is it? But 51.69 is the near support in the weekly chart. There obviously there's supports in the daily. We'll get to that in a minute. But and divergence has been popping off here for quite a while. And the market, on the daily ignores divergence like it just acts like it doesn't even exist. But on the weekly divergence, it doesn't ignore it. It may go for a while before you see a move in the market. So for instance, let me redo this. Here we had divergence showing up and, it's approximately like right here. So all this divergence that was showing up, these red, white dots and the one red dot up to that point was forecasting the market for a pullback. Eventually it happened. It looks like it was about 4,600 down to 42, about 400 points, maybe a little more, maybe about like 420. Okay. Which was not quite 10% because 4,400, 10% would be 440. This was about 420, almost 10% drop, not quite, okay? So that was that one. We're just talking about divergence here, right? We see some divergence creeped up here, a little pullback. Let's go back all the way back over here. This was way back here in July of 2021. And you can see divergence was building for a while, building. Had a little dipsy-do there, okay? Which wasn't much. That was the kind of a small one that ran from about, 45, 75 down to about 4250 maybe. Yeah. So maybe 300 points, 300 points ish, kind of small, right? And then it got a good run going on. We saw divergence. Whenever you see divergence in a valley like this, you can just kind of ignore it. Happening in the valley. But then divergence continued on in this thing. But I've seen this kind of divergence like this pop up coming out of the valley like this, of SMI valley. And then it doesn't really mean much, but in this case it did. It was a big, huge sell-off. Okay. So whenever you start getting divergence gathering up like this, and even though it might take months, right? It takes months sometimes, right, for things to happen. It usually indicates that something's going to give way, all right? It happened here, and here we go, here. And this divergence is at least in recent times, going back to within the, looking at this chart here, back to July of 2021, this divergence is a little unusual because we got a lot of red divergence, and that just simply means this is long-term divergence. Okay. So the divergence has been around for a while. I mean, it's been there a long time. Makes sense, right? Got this massive run up, and the SMI is slowly working this way. Right? That's just basic, right? That's this. If you want to simplify divergence, that's all it really means. Whatever the logic of the SMI is going that way while the price is going this way. That's divergence. Okay. Obviously, the SMI stands for Stochastic Momentum Index. So if we just take the momentum aspect of this, momentum is slowly weakening here over a period of months, right? It's from over here, it was December of 2023. And of course, right now we're just getting into April of 2024. So, a good solid 4 months, right? Maybe a little more than that even. Yeah. Good, basically almost 4 months here. All right. And, why do I say here we go again? Because, well, we've been here before, where we see the MACD has this little hook going on, just starting to show a hint of a hook. It happened back in here a few times, and then it just ignored it and kept on going to the moon. All right, I call this the madness. This is madness. All right. Yes, it's profitable. That's great. I'm a trader, like many of you are. Some people are investors, but I tend to be more of a trader. I have some investment positions that are investments, corporate bonds mostly. But yeah, as a trader, I'm looking at this and I'm saying to myself, okay, here we go again. A little hooky action going on there. Divergence has been spouting off for quite a while. And, it's the here we go again scenario. So that's all I'm really going to kind of say about, what I'm seeing candlestick wise, momentum wise, divergence, all that on the weekly. I don't have enough data here to say, oh my gosh, the bull run is over. All right, but when I go to the daily chart, we're gonna have a little discussion of the daily chart. Shh, don't tell anybody. Okay, get a little discussion. Got to pull you aside. No, I'm just kidding. But the daily chart's gonna be a different story. I'm just kind of trying to isolate these charts because there's a significant difference right now between the two. So 5169 is the support. I think you should pay attention to that. I think that's a number you want to pay attention to. Okay. And obviously March 31st, nothing happened. The old squeaky, just like this one. Well, we actually did get a little something there. And I guess we could say that this candlestick test is the week of the March 31st low. I guess we could say that's what it is. So there it is. And that might be all it is, right? Today is the 2nd of April, so March 31st is pretty close as far as the week goes. And that may be all it is, right? We just get another one of these guys and we go to 6,000, right? Okay, no, I don't. Anyways, you follow what I mean, right? It could just be that. All right, so we got this June 16th cycle low out here. I mean, this thing is massive. Over here was pretty significant. Let's go back. I want to look at since we're taking a good honest look at the weekly, let's do a refresher. Let's just look at this thing. Does it make sense? And I'm talking about the green cycles. Do they make sense? The big old green cycles. Well, they make sense to me. I mean, they haven't really changed. This is still hoosh. This is semi-hoosh. This is hoosh. Yeah, I know there's something here. We may have to pull something here. But I got the blue ones. I got the blue candles, the blue cycle, taking care of that. So I think this June 16th for now probably should be green. Change it to green. Should be green. I think it's okay for now. I'm going to keep it there. The blue ones, okay. In this big cycle, within this big cycle, they are really just just little blips, right? Just tiny little blippers so far. That's all we got. Right, and in here we got a little something there, and in here we got this little something there. So they show up, they're just not, this was a pretty decent sized little pullback. This was a massive pullback here. Okay, this one These two kind of go together. And you got that one back there. Yeah, this one's a little sketchy. You got this one right here. This pull back here is basically that. Okay, I still think this looks pretty good. It's just this is, this is the madness run, right? The world's gone crazy here. So it's really hard to pick out cycles. Okay. Enough of the weekly. Let's switch to my trade, but then we'll look at the daily and intradays. All right, here's my trade. I made $600. This was kind of early, really super early morning. I definitely got out of the position too early, but whatever. This is just the way the trading is sometimes. I don't beat myself up about it. I just move on. You can see up here, got into 52.89.75, and I got out at 52.83. Obviously, the market came way down below this. It came all the way down into below this chart, down into way down here. Got down into the 52.35, I think, was somewhere at the low of the day. So I missed out on nearly 50 points. Yeah, I don't even want to talk about it because that's a little aggravating. And that was thousands of dollars missed, but whatever. Overall, I'm a happy camper. Made $600 on 2 contracts. An easy peasy trade. We're going to talk about this trade real quick here. I was up at 4:30 in the morning. And this is really important to understand what I'm about to tell you. I was up at 4:30. That's the London market. And whenever you're going to trade, whatever time of day it is, we're talking about futures here because obviously options traders can't trade overnight. I just thought I'd throw that in there as a quick little jab. But future traders can. So I was up at 4:30 in the morning, and I noticed that the London market was pretty choppy. It didn't push higher. In fact, it was chopping slightly downward, slightly bearish. Just for that session, you follow me? It's really important you understand when you're trading, what session are you in? Are you in the Asian session? Are you in the London session? Or are you in the US domestic session? There's some other smaller sessions in there that kind of overlap, but those are the big 3 ones, right? Well, I knew I was in the London session. 4:30 in the morning, my time is London. That's a pretty active time for them. That's kind of midday-ish, late morning, midday kind of thing for them. They're trading. And I noticed the SP 500 was just kind of tracking sideways and chopping down. Okay, why do I say that? It's important you get the context of what's going on in the market up to that point in the day. Really important. You just organically have a sense for what is the market doing. Has it been really bullish? Because usually lately that's what it's been. Especially London, they've been driving the market up higher, and then the US has been choppy, choppy, chop. But so last night it was the opposite. Last night was a lot of chop for London, Asian in London. It was working slowly, making its way down. Okay, so that gave me a message. The market is weak, right? That's the message. When I got up, looked at the market is weak. It's not strong. So within the context of the environment that I'm in, I've got my message. The message is the market's weak. Now I go look at all the technical stuff. I do all the technical aspect, right? But you should look at the market organically first. And then I decided, well, is there an opportunity here? Well, of course there was an opportunity. That time was about right here. It was like down in this area. And I knew after looking at the data and some other things that there was a certain degree of confidence the market was going to come back more. I think I got in like right up in here. It did a little bouncy bounce. It kind of farted around here and then finally broke below, and I got out at, like I said, at 52.83, which would have been like down in here. Just like right down in here. Okay. It did the bouncy and I got out. Well, why did I get out? Because here's a Gittes Plus indicator. The Gittes Plus indicator can tell you that there's a possible trade coming up. It also can tell you when to exit. So I used it. And it was smart. The market bounced and then it did one of these deals. Okay. I should have re-engaged, but I didn't. All right, so I'm just doing a quick down and dirty of my particular the anatomy of this particular trade, because I want you to understand that when you're trading, you need to know the nature of the market in addition to just technicals, data you're looking at, right? Whether you're an options trader and you're looking at where are all the calls and puts, where are they stacking up? Because that's what options traders do, among other things. theta and beta and smeta and weta, and did you put enough peanut butter and jelly on it, whatever, with options trading. I used to do a lot of options trading. I find, as I moved and started trading futures, I found options annoying. Way too many variables to have to figure out, and always dealing with decay and blah, blah, blah. So I don't mess with options anymore because I'm far more profitable as a futures trader than I ever was at options trading. But anyway, there's that trade. Let's take a look at the daily chart. Okay, so here we are on the daily chart. And I talked a little bit about this in this morning's video. I put out kind of a warning video this morning. So maybe some of the members had a chance to watch it, maybe not. But I'm seeing some things here that definitely have caught my eye. So this complex of candlesticks that we're seeing here, this 7, 3, forget that one for a moment. These 7 candlesticks is a little unusual in recent times. It's not a typical pattern. And like I said this morning in this morning's video, Thursday was this little candlestick right here. There's not much trading going on. So Easter kind of interrupted the natural flow of the candlesticks here. But also, just this complex of candlesticks is not your typical formation that we've been having in this massive bull run. So that's number one. We're going to, even though I kind of covered this morning, we're going to look at this again now and just going to talk about this briefly for those that didn't see this morning's video. If we go back here, you'll notice it's usually a kind of 1, 2 up, it'll be a run up and then a 2 or 3 down, right? Run up, 2 or 3 down. Well, here we didn't really get a run up. I just ran out of gas right away. That's unusual. That almost never happens like that. Okay, here we got a run up. We got a little ran out of gas a little bit, but it just kept on marching. Then you had your 2, basically your 2 down. Here we got a little run up and a 2 down. Here we got, a run up and then, whatever, kind of track sideways, but down. Okay, the only other time I've seen this complex like we got right here is this area. We had the very similar type of thing. Okay, the market did survive this, as I said this morning, and it took off again. So this is not enough to say that, well, we have a big enough behavior change that I think the market's is gonna come crashing down. So again, just organically looking at candlesticks, I don't have enough information to say, this is it. This is it. That where the bull run is going to be at least temporarily over for a while. Can't say that just based on candlesticks. But what I can say is this is definitely an eye-opener. Okay. And this is not typical, because just draw a line. This is super simple. Just draw the line. Krapolamskis. And I said this morning, if this retraces back up, which it did, it pulled back up about not quite half, but almost half of this candlestick, but it still stayed pretty big red day. And so this didn't retrace sufficiently. It stayed below this line. And we are currently at 2.67. All right. And we haven't been that low, if I just kind of grab it right here, until way back here in January. Okay. So it's been over 3 months, right? All of January, February, March, and did a little just coming into April here. So good solid 3 months that we haven't seen the SMI this low. So this is an eye opener, right? This is catching my eye saying, wait a minute here, something is not the same. Now we've had that happen back over here to some degree, right? We've had it happen here, like this big dip. But what did the price really do? Well, it didn't really dip that much, right? Look, it just came down for like 4 or 5 days, and that was it. And whatever that was, which was about 48.50, we'll call it, down to about 4,700. So this was about 150 points, give or take. I'm not going to go into the exact amounts because it doesn't really matter. The point is, this drop really wasn't that big, even though this came way down here. Right? We didn't get a big old pullback. But of course, that was a different time in the market, right? They didn't have all this time to run up yet. Right? Let's do the old squeezy peasy here. Okay. So back then, when this happened right here, the market really was just, had been running up for about 2 months. Had a little pause, 150 point pullback, and it's been to the moon ever since. All right. So just the SMI by itself, as this dips down, is not enough to say, oh my gosh, we are just going to absolutely start giving up, hundreds of points or even 1,000 points, right? It's not enough to say those kind of things. All right. But it is enough for me right now to say that this pattern, this candlestick pattern, and the SMI are not following usual typical bullish behavior. Like I said, the only time we've seen this is one other time in this entire massive bull run, which is over here. And yes, it did survive it. Ding, give it the check mark, and it took off. So for right now, the market's still bullish, very bullish, but this is something you want to pay attention to. All right. I think I said on the weekly chart, did I say 51.69 or did I say 50.69? Let's just take a quick peek. What did it say? Come on, give it up. 51.69. Okay, so go back. Daily. I'll get it right here eventually. So 51.69 roughly corresponds to 51.81, right? They're in the same ballpark. It's probably the bottom of this candlestick right here. Yep, 51.68. Okay. So I just kind of took an average at the bottom of each of these candlesticks and came up with 51.81. So that's a general area, but the very, very bottom is 51.69 or 68. Okay. So that's where that came from. So, okay, the market just opened up for S&P 500 and give me a second here. I'm going to switch over and actually place a trade. We're going to do it right now. We're going to go short 2 here. Yep. And we're going to let that roost for a little while. And I may have to close it if things get wild and crazy, but we're going to let it sit there for a little bit. And I'll talk about that maybe later. Why did I just take a short on the open? I think there's a little more breathing room here for the hourly to go up, but not too much. Okay. That's why I did it. We're going to talk about that. I'll show you that on the hourly chart today, which I don't share that often, but I'm going to share it without showing the cycles because I'm not going to give up the cycles to the public, but I'll just show the hourly just for everybody. But the members only get the cycles. So if you want the cycles, then you got to become a member. All right. So the deal on the daily here is there's enough evidence here that tells me I see weakness in the market. That's basically what that means. This is all like, how do I make the analogy here? This is all blue lagoons and sweet running water, and it's all just, the crabs and the fish, and everybody's getting along really great here, right? It's just beautiful, crystal clear water. But the sharks are out here roaming around. The sharks are out here. They're just roaming. They're waiting. And they see this. And the seas are getting rough. The sharks are waiting, guys. I'm telling you that right now. The sharks are definitely waiting. And this right here. And this right here. Today, right now, this just opened up right now. As you can see, the market's trading right now. 5 o'clock here. Today, which is Wednesday, this little candlestick that traded to open up Tuesday night here is really Wednesday. This is a huge pivotal day. If this day is a down day like this, okay, if it does one of those, game on. Okay, because I have no problem being in the crystal clear waters making money. I have no problem being a shark. Bring it on. Either way, I'm good. Okay, or I'm just telling you right now that if we get a big red date with this candlestick right here, watch out. I believe that's going to be the first sign that the market's weakening and we're going down. How much down? I could see 300-400 points happening pretty easily. You could just take, 5% gives you about 250 250, a little more than 250 points, maybe 260, 265, 270, somewhere in that area. 10% is going to give you 526 points. Okay, you guys can just divide by 10 here to get your SPY numbers. All right. So yeah, I think somewhere between 5 and 10% is probably fairly safe area, and it could be more, but somewhere in that area. So anywhere from, like, let's say about 260, 270, all the way down to about 5.25, I think is pretty reasonable. Really should take it off this number up here. So let's say, yeah, 270-ish down to as much as 533 points, right? Decline from that all-time high. So, you know, if you take 533 points from there, you know, 300 leave 200, it's going to be about, what, 4,800 area, right? Somewhere in there. Maybe down in this area over here. Somewhere over here. Right? Is it 49, maybe 48.33, I think, right? Yep. I think my math is right, 48.33. So that's, you'd be down in this area over here, right around this area. Okay, so whatever it does, you know, however it works out. Okay, all right, let's look at the intraday charts. All right, we're on the 15-minute chart. Where was the trade of the day? Well, let's see. Where would it be? I don't see anything here. Oh, I'm sorry, here it is. Which was the time I was up. And I bailed way too early, but whatever. And the Bombardier Club came in and dropped bombs all over the place, and it just kept on going. All righty. So that's that. Here, the 15-minute chart is very elevated right now. All right, we're going to look at the hourly chart here in a little bit. So there was the trade today. The GIPS Plus indicator absolutely nailed it. You can see here, Asian and London markets just said, we're not interested. They were trading gold last night, actually. Gold was going up while they ignored the S&P 500. So the money was rotating. You know, as far as London was, Asia and London was concerned, they were rotating their money into gold and probably other products, but whatever. I saw that. And this market said, no, thank you. I don't not interested in you at all. No, not at all. And they finally gave it up. I was up in the morning about 4:30, got up, saw this trade, took it down to whatever, somewhere in this area, and then fell asleep at the wheel and missed all this. Okay. All right, so that was a trade today. It's super obvious, right? We don't really need to talk about anything else. It just stands out like a sore thumb. Look at this thing. Check. GIPS Plus indicator, nailed it again. Seriously, you should really become a member. I still don't understand how this membership doesn't have thousands of people in it. It's just free. For $7.99, $8 a month. I don't get it. It's like so crazy cheap. And yet this right here was thousands of dollars of profit today. Thousands. Yeah, it pays for their membership for the rest of your life, you know? Anyways, people are funny, man. They'll hold on to the $8. They don't want to give up the $8 because they don't trust that anybody trying to rip them off. I won't let anybody rip me off for $8 a month. No, sir, I will not. And yet, day after day, I show these videos about, you know, massive trades and big money, and it's just weird. Okay, let's move on to the hourly chart. I'm going to show you something super special. All right, so here we go on the hourly chart. I'm not going to show the cycles. Like I said, there's cycles in here. That's reserved for members, okay? But, so like I said, if you want to become a member, stick around to the very end of the video and I'll show you how to do that. So let's take a look at this. This was Sunday night over here when the market opened up, just a little bit of time, and then it became, you know, midnight became Monday, okay? And, right, yesterday, this was yesterday now, it had a big fail, right? And then the rest of the day, Monday, this was early in the morning, if I remember right, all the way down to 10 o'clock so London, Asian London and pre-market US just failed huge, came down to 10 o'clock and just stopped and tracked sideways. The rest of the day, nothing. And then we had Asian and London did the same thing. They just continued and then bam, another big failure. Aha. All right. Typically what would have happened in this scenario is when you get two down days like this is you're gonna get a big run up. Okay? You get the big run up in the market. Okay, but normally what happens is the SMI would be near the bottom. It'd be at the bottom. It wouldn't be up here already. The run-up would happen from the bottom. Okay, but we're not at the bottom, we're up here. So there's definitely a change in behavior here. Okay, let me just go back and see if I can show this. Okay, here's a perfect example. Right. So this is 3 o'clock, the close of intraday, right? And look what happens is at the bottom. What happens? Asian market grabs a hold of it. It takes off and goes up, right? Here it goes up. Asian market, London market, take it and run with it. Right? That's typically what happens, but that didn't happen here. Right? The grab at the low happened at whatever, this morning, 10, 11 o'clock, which is somewhere around here, US, not at the end of the day. So it had all day to gain momentum, but price, it bounced back, but not big. In other words, it never got above, what is this over here? Where are we? Here it is right here. Just trying to find, I guess, 5 o'clock. Somewhere back over here. I guess it was right here. Yeah. There's that candlestick right there. This was actually open at futures for Tuesday. Right here. This would have to rebound all the way back up above this candlestick. And you can see the SMI is pretty lofty here. Right? It's already way up here. Now, in the moment, its true momentum is starting to cross over down here, but it's well below the zero line. So this is a change in behavior. Like I said, normally you get a big drop and then Asia and London have a chance to run it up, but that's not the case. It's already ran up. Momentum-wise, it is. Do I think there's more opportunity for this to run up overnight? Yeah, it could. In the position I just took short, I may have to cut it loose, but it's fine, whatever. But my point being that it's going to have to work real hard here, because the SMI is already way up here. It could happen. We know this thing's been a crazy bull run, and we're not out of the bull market by any means, and this could definitely happen and take off. But my instincts tell me it is going to make some kind of run, and the 50's coming down, and it's going to get up here to 52.80 something, whatever, and run out of gas. That's kind of what I'm seeing here. That I don't know if it's going to have enough energy to make it all the way back above this 5,300 area, or 52.90, 52.80, and eclipse Tuesday's open. Because it has to do that to make the argument that we're still very bullish. If we get a third day down with a decent sized red candlestick, man, I'm telling you right now, there will be sharks in the water. Okay, so that's why I'm showing the hourly here, because this is already elevated. It's got a little more to go. Get up into here. I think it's going to be hard for the hourly chart to muster enough energy to stay elevated, to get the momentum to go positive above the zero line, and get way back up here and eclipse this area up in here, which is what it would have to do. Okay, now the open on a per daily candlestick, the open's right here at like 52, what did it open up, 60, 52, call it 5260, 5263 we'll call it. So the candlestick could be green tomorrow. It could come up to 5280 and kind of just sit up there like this, right? And we'd have a green day. And that would be still bullish. The candlestick itself would be bullish, and the bullish run would still be intact if today's candlestick goes green and stays green. Which it could do that. I could easily see it doing that. Like just have kind of a small green candlestick, and then it just starts all over again, and we make more runs for new all-time highs. So like I said, today, meaning Wednesday, as we're opening up the new session, is a big deal. A really pivotal point in the market. Okay, you want to become a member? That's great. There is a discord.com link in the description of this video, right below the video on YouTube. Okay, just make sure you read the instructions. And then when you click on the discord.com link, it's going to bring you over to this Get a Server. And then click on Server Shop. It's going to bring you to this page right here. $7.99 a month, guys, just like I said earlier in the video. The streaming charts are down here. That has the Get Us Plus indicator on it, like I show in the trades of the day, which I used it you saw me in my trade for the $600 I made today. I literally used the Get Us Plus indicator to exit. A lot of times you use it to enter, sometimes you use it to exit, sometimes you just use it as getting a sense for the market. Okay, it's a really great indicator. But anyway, the streaming charts, the S&P 500 down here, the 5-minute, the 15-minute, the 1 hour. So just when you join, just click on this, you'll see the stream. They stream Monday through Friday, 24 hours a day. Okay. Also, I'm streaming gold. So when you join, just say, hey, you can ask me like in the member chat channel, hey, get us, where is the streaming, what's the link for the streaming charts for gold? And I'll give you that. Okay, so you can watch that product too. Some members like to trade gold, so they're looking at the streaming charts for gold. All right, so both of them for the Get Us Plus indicator, they send alerts to their respective alerts channels. So whenever there's an alert on the S&P 500 streaming charts, it sends an alert over here to this channel right here. So you can just right click like on this channel and turn notifications on. Also, the gold streaming charts send their alerts here. You do the same thing if you want to watch gold. Okay, there's premium symbols every day. I just put them in here before this video. There's premium symbols in here. There's future symbols in here. There's optional stocks in here. And there's some other symbols in here. You might want to check them out. Some really good symbols in there some days. Okay, the Get Us Only Post channel, this is where I post a link to this video. So you can just click in there, go in there as a member. You can watch the video right in the channel, or you can click on it and take it to YouTube, your choice. Okay, I also notified the members every night, Monday through Thursday, when the emails go out, because there's an email that goes out to the members every night. So you might want to right click on this channel too and turn notifications on, just so you know when I drop something in there. Speaking of emails, every night, if you want to get the nightly email, put your email address here in the emails only channel. And then every night I send out a daily chart of the S&P 500. It has the daily cycles on there. It has support and resistance lines on there. Okay, really nice chart. And I give maybe a few sentences or as much as a paragraph of my opinion about the market. And yes, it should be pretty obvious my opinion about the market right now, but members, make sure you read your nightly email. This is something the members get every night, Monday through Thursday. They get an email, right? And I tell them my opinion about the market. And yes, last night I said I believe the market was going to pull back. And bingo, we had a big pullback. So guess what? Yes, the members do their own trading. They're not robots, but they do get my opinion, and some of them use that opinion to help make trades, right? So that's why they like the email. Okay, yeah, I keep track of solar activity for various reasons that affect the world and even the marketplace for that matter. I do trade fixed income, which would be mostly corporate bonds, so sometimes I'll put things in there. And then these two channels is where we do most of our chat. So just think about this. Everything in this big old vertical rectangle here. Everything you're getting here. You get the two streaming charts, the S&P 500 and gold. You get the alerts to go with them. You get the premium symbols every day. You're getting nightly emails. You're getting member chat. Of course, there's support if you need support. Usually the support's reserved to something like, hey, I'm not getting my emails, and I go figure out what's going on and fix it. Okay. That's usually a Discord thing. They mess up people's handles and then the emails get messed up. Okay. So you're getting all that for $7.99. And I've showed, dozens and dozens of times I've showed my profitable trades on this channel. I've made thousands and thousands of dollars, and I've showed on this channel, to encourage people, not only my members, but for the public to join. It's weird to me that the membership isn't much larger than it is for this amount of money. It's weird, but people would be people, and that's the way it is. Okay. Got to talk about the rules here. And here's the refund rules. Please read the rules. You're responsible to know what the refund rules are. Okay. Also, there's a disclaimer here that I'm not a financial advisor. I do not give financial advice. Everything on this server, whether it's me or anybody else posting stuff, whatever they post, doesn't matter who it is or what they post, is strictly educational purposes only. Even if they try to imply otherwise. Okay. I'm telling you right now, everything is educational purposes only, right? You are responsible for your trade. No financial advice is implied whatsoever. Okay. Yes, I believe the service, in my humble opinion, is going to help you be a better trader, and I do think you'll make money if you're patient. Okay, I think you will be profitable. Okay, but you're still the one pulling the trigger on the trade. Okay, so be responsible. Yeah. And lastly, in here is rules about being respectful on the server. I don't want to hear any foul language. I don't want to see it on there. It's not allowed. No nasty posts. No nasty links. no criticizing other people, none of that stuff. Just keep it clean. Okay, I'm a conservative. I'm a Christian. I like it peaceful. All right. If you're going to come in here, by all means, come, please join. All right. But let's say you're a Democrat and you join. You don't like conservatives. I don't want to hear it on the server. Okay, you're more than welcome to join if you're a Democrat, but just don't spew your Democrat junk on my server. Okay, you don't have to agree with me being a Christian. That's fine, but you can still make use of the server of the service and become a profitable trader. Right? That's my whole point. Just be peaceful. If you're going to be a jerk and you start breaking the rules, I'm going to warn you. I'm going to force you to delete the post, or I'll delete it for you, and I'm going to be watching like a hawk. If you do it again, you're going to get kicked, and if it gets bad enough, I'll ban you. All right? So remember, read the refund rules. I don't want to hear any whining or complaining. If you're nice, we're getting along great. If you're a jerk, you're going to get the hammer. All right. I got to say those things, guys. I know most people are peaceful. Most of the members are great. Like, it's very rare someone gives a hard time. But, I've had Chinese people try to jump on this server who don't want to pay. They're DMing members directly through like the API, the Discord API. They're trying to trick them into clicking on a link. So be careful of that. If you see anybody saying that they're Giddis and click on a link, that's not me. That's an imposter. Okay, so please be careful. Don't go clicking on links and signing up for stuff. Okay, I never direct message or DM members ever. So if you're getting that and somebody claimed to be Giddis, it ain't me. Okay. Yes, I try to kick those imposters that come in, but sometimes they're hard to catch. So please be careful. Okay. And the reason I say all those rules is because there's always one or two people that come in every once in a while and they want to be the big boss and they have an ego and they come running through here and they want to tell everybody how to live their lives and, and all this other stuff. So nowadays I just say it like it is and keep it straight. Okay. All right. I think that pretty much covers it. I hope I had an awesome day of trading. I think the market's in for some pretty wild times. And I think there's going to be some serious opportunities for profit, both in the S&P 500 and gold. All right. So happy trading, everybody. God bless everybody. We'll talk to you all real soon again next time.